So this is our Fintech panel. And as you can see, we've got a really nice broad array of voices and expertise to really talk about this space and how the voice first era is impacting not only just the fintech space, but consumers across the board, how we manage our money. And I am pleased to bring up our moderator, David Ritter. David, come on up, and we're going to bring our panelists up. Let's give it up for David Ritter. David is a senior analyst at Bloomberg Intelligence, and we're thrilled that you can moderate, David. Thank you so much.
Thank you. You hear me okay? All right, come on up here, guys. I think so. Do we have enough chairs? Yeah. This was even something. Yeah. Oh, you need one more chair. Okay. Stand for that. Let's go ahead and get started. So again, I'm David Ritter. I work for Bloomberg Intelligence. So we're a relatively new research unit of Bloomberg. We cover more than 2,000 companies across the entire range of industries. For myself, I've covered the consumer finance and fintech companies for So I cover consumer finance and fintech companies, so the large payment companies, Visa, MasterCard, American Express, the credit card issuers. I cover what's an exciting new field is fintech lending. So Goldman Sachs has a new business that's growing very rapidly. I cover lending club, some of those. So anything involving consumers, finance, and technology is pretty much my coverage. So we have a very mix, I think, of speakers on the panel today. We have some folks who work to screen new technology ideas at major banks, work for the banks, and we have technology companies here who are trying to partner and work with many of these large banks in the fintech area. So I thought what we'd start by doing is just having each of you introduce yourselves and kind of tell folks, you know, what it is that you do and what you're trying to do to sort of push the envelope for your company and help them grow.
Hey, good afternoon, everyone. Thanks for having me. I'm David Heafitz from Prudential. I'm responsible, I have a day job in global and web application development, but one of my other responsibilities is looking at external partnerships with Prudential. Particularly one of the ones we work with most closely is newer Prudential partners and their and the companies in their incubation portfolio. And my responsibility is to look at the companies and go find fintech companies or enterprise-grade startups and see how we can integrate them into our corporate infrastructure. So, we were talking earlier, one of the biggest challenges is how do you get a startup, how do you get the latest and breaking disruptive technologies into an organism like Prudential, and how can we fast-track them? So I would say that's the biggest challenge is how to get them through the regulatory and supervisory hurdles that we have as a very highly regulated corporations.
Since we started talking about it, David, why don't you, for a lot of the folks in the audience who might run fintech startups, sort of give them a feel for what are the kinds of things that you're looking for as sort of a way to get at least a little bit more with you.
It's about knowing the space you're in and understanding what it means to be part of that large enterprise. We find you're not going to be able to tackle the large structure we already have in place, like an ERP system or a corporate HR system, but that niche specialty that distinguishes you from the big players, and that you're ready and prepared to go through all the legal hurdles and have the patience to figure out how many you can go through a lot more iterations to build that rapport in a large enterprise are critical. So I think that's those two aspects of being prepared for that, to move through the regulatory hurdles, and then also be able to build a rapport. It's a long tail on getting into an enterprise. So we find that sometimes I meet the companies, a year, and then we go through the process for a year later to go through all the different rounding the houses between legal compliance, risk, and business ethics and stuff.
What percentage of companies would you say are aware of the types of things they need to do versus not aware?
An easy way to look at it is where are they in cycle of the business. So I find that the companies that are out of it, when I go to different conferences, the companies that are straight out of the bat at the beginning, they're not going to like understand. If they've been through a couple series and they've been through a couple rounds and see the heads nodding, they would have probably dealt with corporations in different ways and have some idea. And those corporate partners have taken them through their rounds. It's not all around A, B, round A or B, or just even beyond the seed round. They understand the dynamics of what it means to be a big player. And a lot of the VCs are prepping them that way. Your Effective Partners has done a lot of work to make sure that their portfolio companies are ready to walk the walk and walk the talk. So I think that's really good.
Got it. So a lot of the companies you're dealing with have been through that initial stage already development.
I mean, we deal with across the board ones that haven't.
Yeah.
It just takes a lot, and that point, you have to do a lot more prep, a lot more work, and you have to find their specialty and why they're unique in other areas. The ones that have gone through some of those other series are usually much more prepared when they meet the chief risk officer, the chief compliance officer.
Sure, makes sense. Okay, next.
Hi everybody, my name is Aakrit, Vaish. Thank you so much for having me. I'm the co-founder and CEO of a company called Heafitz. It's a conversational AI company. We've been in business about 5 years. We started out with standard text or chatbots, and then over the last 2 years we've been doing a lot of work with voice, which is why it's super exciting to be here. A lot of what David mentioned, we sort of got through. We've raised about 14 million capital total, so we've been through a fair share of learnings and know-how about how to deal with large financial institutions. We've worked with a combination of banks, brokerage, insurance, across the spectrum. We, as of last month, crossed about 1 million interactions processed in a day across all the live bots.
Wow, that's great. Super.
Okay. So I'm Jason Mars. I'm the CEO and co-founder of Aakrit. It's an AI company that is focused on having the next transformative shift in the experiences we have with conversational AI. So what we're targeting is to build experiences that are better than Google Assist and build a platform that allows anyone to build experiences that are better than Google Assist. Google Assist has been the kind of benchmark that consumers have used as their expectation of what conversational AI should be. Amazon Alexa is also a very good entry, out of the box, not the skills built on it, as to what conversational AI could be. There's a few others, Siri is kind of, taking a backseat to some of the other leaders, and what we want to do is be able to take the kind of technologies that make that possible and make that harnessable by the masses, democratize it for enterprises. So we started as, in another life, I'm a professor of computer science and engineering at the University of Michigan. So 2 of us professors were doing research with 14 PhD students as to what the next 10 years of this technology should look like, which namely the experience should be like indistinguishable from you talking to a human being, messy, you say random stuff, not have grammar, rules followed, take whatever turns you want, jump around in the conversation, and have it be resilient in a way that you can trust it. So we built a platform to do that. We've had products for 6 quarters. We've raised money with very savvy investors. Folks that left Sequoia to start a fund in the Midwest. We've done about 10 million in revs. In the last 6 quarters, we've had a quarter of cash flow positivity. And so we're working with 3 of the top 6 money center banks in the country to bring product into the hands of all of you guys. As virtual assistants by the end of the year, the first ones that should go live. Barclays in the UK is already live with Facebook Messenger as a first version. So it's been great. We're in a couple continents, 6 countries, and 3 different languages in production. So, but the next step is, going beyond financial services. Quick service restaurants, drive-throughs. We won an RFP with one of the top 2 quick service restaurants in the country. We're working with one of the top 4 automotive industries for an in-car experience. And we want to democratize it and allow every developer on the planet to have the technological platform that lets them build conversational experiences better than Google Assist.
Wow, that's tremendous. Thank you so much. Go Blue.
Thank you. Go Blue. I do want to brought up a very important thing. Better than Google Assist. One of the points you asked earlier to get the enterprise. That is really shocking. I find that when you want to build an enterprise technology, employees which are using are much more demanding consumers because they realize that when they're out in the consumer world like that, it's just like, it's never going to work. But then they think when you're a provider for an enterprise, it's going to be perfect. You must know what I say out the back. So it's a really strange dynamic where people, I get our managers saying, it can't be as good as the consumers. I'm like, no, that's not even it. What you just talked about are the challenges. It's really hard when you do an enterprise because if it doesn't work, they turn you off.
So the future, kind of as you see it, is no more of this, I'm going to order ahead and pick up my food. I admit, sometimes I'm not pulling over the side of the road, okay? Hit my 2 or 3 things and get to go. So now I just be able to talk to it.
Absolutely. By the way, the modality of how you're going to interact with conversational AI matters a lot. You shouldn't be using a chatbot in your mobile app. It's not a natural way to interact in your mobile app. You should use a voice. Maybe it doesn't speak back to you, but it shows you a visual that's useful. On Facebook Messenger, where there's a live agent that talks to customers, that's the medium where a chatbot that makes sense, right? And you have to have great conversational AI so you can have a good experience that's similar to chatting with a live person agent. So it really matters, of course the chatbot is impossible on a home device, right? It really matters how you create the end-to-end experience that includes the modality of the device that you're using as part of that experience. And what it needs to do is reduce the amount of time it takes to complete an action. If I can transfer money by tapping buttons on my GUI, I don't want to type to a chatbot to transfer money. I want to do it faster, so I want to talk, send $100 a month real quick from a regular account. Boom, done. Which is better than tapping buttons.
This is a bigger question. This is a question for all of you guys, not coming from a technology analyst, coming more from a financial services analyst. We obviously have to have faster internet, right? We have to have 5G or 6G or whatever. Is that, where are we in that evolution? Because to me, even if you're talking to it, if you're working mobily, you're still going to be watching things spam. I don't know if this is the experience of what you want to do. So does it really take off in 10 years from now, in 5 years? I'm talking US, but other places.
So I would say from a technical perspective, we're there now. So 5G is coming, and it should be orders of magnitude better than it should be able to compete with your cable modem at home. So that's coming, and so we're going to be there soon. But that spinning is not only just the data transfer; it's also the computational work that happens on the server side. And luckily, we've got great processor technology, GPUs and TPUs, they call it, neural network processing, that's making that faster. So we're getting there in a year or so. I think we'll have a better experience.
Right.
Hey, thank you so much for coming outside to see your marketing right. We are very engaged on Fintech company. To be honest, we still consider ourselves a startup. Yeah, that's the only way to survive. So, we work with 40+ brands globally, all financial institutions. We are highly focused. Primarily, as the name suggests, we wanted to simplify the capital markets. So we were the first to launch Hopen trading application for PM trading back in 2005, even before APIs or iPhones and whatnot. But as you see, increasingly interfaces, bandwidth, everything is going to be ubiquitous. So currently we're talking about voice is ubiquitous. My daughter thinks that everything can be voice controlled at home. I didn't even take the dial-up connection for that. Right? So my dad, when he's 74 years old, I got him a voice and Google Video and whatnot. He's taking voice for that. So I think the fastest adoption is going to happen from the preteens, the millennials, and the Asian population, and everybody in between are going to adopt, right? So that's how the whole trending is going to take place. But kind of taking a step back, what we do, how we enable that, is that we acknowledge that the user interfaces are going to be plenty, right? So connected car, IoT, refrigerator, voice, anything, anything that will be connected, right? Like I said, everything will be ubiquitous in terms of how you want to connect to the internet, what kind of transactions you're going to do, either with Amazon.com or with your banking service provider. It doesn't matter. What we have built is a container framework because banks even though they want to be at the forefront of technology, they all are the core banking backends. So legacy, you have privacy, you have compliance, regulatory, security concerns. Therefore, banks are only comfortable connecting with the middleware, which can connect with the multitude of front end, right? So that's exactly what we do. So we built a purpose-built middleware solution, which is now developed as a general framework. So all these applications in terms of deep learning, could be voice, could be chatbot, can be parked into our framework. And our framework securely connects to the bank's backend, and it can enable particular frameworks. So that's what we want to do.
Yeah, I'm glad you brought up the security concerns and privacy concerns, because obviously with the news we've had out of whether it's Facebook or constant hacks or payment information or things like that, I think that that's, you know, certainly speaking from my generation, that's a deterrent. For a lot of the young folks, maybe it doesn't bother them as much, and maybe as that group of, you know, becomes a larger and larger part of the economy, it's not going to slow these things down. But now I think, do you have any thoughts on that?
Right. So to give an example, we power the world's second largest stock market, stock exchange, called National Stock Exchange, based in India. They are the fourth largest in terms of equity trading. Right. So we process over $5 billion of transactions. So we can power the mobile trading part of it. But again, the same point, right? So it could be a Shopify which could come out, shops could come out and say that they had a security breach and let's say 3,000 credit card information was being stolen, but a bank would come and say that. Right? So that's why they want to really make sure that even though there are a lot of exciting fintech startups out there, banks want to work with established fintech startups like us. So we in turn go back and bring all the other fintech products together, curate them, and bring them into our app store so the banks can securely connect. So we offer the most important feature of platform to be security and the ability to connect to the whole bank to back without having to expose anything to the vulnerability of the front. So that is our biggest concern of the bank. We address that being a front-end player. Right? What we enable is the digital experience, omnichannel banking or omnichannel wealth management, right? But we are very experienced.
Strategy at Bank of the West in San Francisco, and we are very much new to this space. So I'm here with, it sounds like a lot of folks have some experience with this, and I, as a content strategist, am very interested in voice, conversational design, and I think that's why I kind of rose up to the challenge of bringing that into the bank. That now.
That's great. And you said, you know, Bank of the West is obviously a fairly large public bank, so maybe for the benefit of the panel and the folks here, you're saying you're relatively new to the whole fintech. Why has that been? Is it just more of an institutional thing? Is it a risk appetite thing?
I think what I meant was new to the voice.
Okay.
Voice space. We definitely were owned by BNP Paribas. Which is huge in Europe, and you know, I think some people look at us internally as not being as big as you think we are, because we're still mostly on the West Coast. We're not in every state, so I think there's this internal struggle of who are we becoming. So we're definitely moving forward. We have a new EVP of digital channels who is very motivated for innovation, and new folks on the UX team that are bringing in agency background and other things. So we're definitely at a stage where there's a lot of change happening, and it's very exciting.
Great. That's great.
Hi, my name is Heafitz. I'm a product manager for Wells Fargo. I work in our group that changed not too long ago, but it's payments, virtual solutions, and innovation. So I work specifically for the authentication and fraud team. So, and this is on the commercial side of the bank, so it's not the consumer app that you interact with, but it's the app that businesses interact with to perform their treasury management duties and things like that. So one of the things we just released actually was Aakrit. So our users can actually authenticate into our portal using their eyes when they work with them.
Great. I use your app every day.
Yeah, it's great, right? Do you use the eye?
No, I don't.
Why is that?
Hi, my name is Kumar. I'm a product analyst with FarmSec. We are a company that is
just a general question for the panel. It goes beyond just voice, but I hear my companies talk a lot about machine learning and artificial intelligence and all these products that they have in process that they're investing in. Where do you think it's really making an impact on the bottom line at this point, not just in the future? Because I always have a hard time kind of getting my arms around a lot of that. To me, it's almost become a buzzword.
No, I mean, it's very important to understand that when people say terms like machine learning, deep learning, AI, etc., it's almost like they're talking about a new type of plastic, right, or a new type of steel. And so it's a tool that you wield, it's materials you use to build something. But it's really the something that needs to be well understood to understand how it's going to be valuable to your life, right? That new plastic is useful because you'll build a bridge with it, it's cheaper, and it can hold twice as much weight. That's the properties of plastic, but the bridge is the value that you're going to get in the world. Now, particularly in the conversational AI space, it's very, you've got to be very careful when people say machine learning and deep learning, because a virtual assistant, natural language understanding system, is one that is composed of many constituent parts, right? You have to do many different types of activities. You have to reason about the data. You have to understand what was said. You have to be able to understand the nature of cross terms of a dialogue. And you can use different materials for each piece. It turns out you can take, machine learning, and then I pick out in a sentence what the nouns, verbs, and adjectives are. You can say I have a deep learning approach to identify the nouns, verbs, and adjectives. It turns out that the properties of deep learning isn't necessary to do that well, but the properties of deep learning could actually make that unnecessary, where you don't have to know the nouns, verbs, and adjectives in a sentence. And actually, you guys probably couldn't tell me the last 10 verbs I've said. I say this a lot. And if I give you a bunch of money, and it turns out you understand everything that I've said so far. However, when you hear deep learning in many conversational AI systems, it's to identify the nouns, verbs, and adjectives, which is not necessary. So the buzzword of deep learning can be used to sell a product, but the value that deep learning can bring to the table is not capitalized on. Because you could actually use a deep learning approach to never pick out nouns, verbs, and adjectives, but understand what you said out of the messy craziness that you said. So what matters at the end of the day? You'll hear these buzzwords, deep learning, machine learning, all this stuff, AI, best AI, whatever. What matters is the experience that you see. Watch that bridge being driven over by 18, 16-wheelers or whatever, and then say, I get it, that's an awesome bridge. Okay, it was built with this fancy new plastic, but that bridge, I can see the value in the world and you can experience it. So when you see, when you have some solution, fraud detection, see how it detects fraud with a conversational AI engine. Play with it and experience, oh, this is really good. And that's how you'll know if you're not an expert.
So, sorry, just to add on to that, I apologize, is that, one way to look at it is that what is AI, deep learning, machine learning, in terms of technology. Another way to look at it is that what is it for the bank, or what is it for the user, bank's user, or various users within the bank. So now let's look at the journey from the eye of a marketing manager at the bank, right? So I'm trying to constantly sell financial planning to my prospective HLS. So all this data is available, right? So for example, I live in the area, I know what the certain address. Bank knows everything about me. So, but for privacy reasons, they cannot really target me at an individual level. So very recently, something happened. A friend of mine passed away. He's 38 years old, and I've been thinking of financial planning for the last 2 months, right? So whenever I think of buying a new gadget, Facebook for some reason shows me that I don't see an ad about financial planning on Facebook. So because the data is not available, the data is available to the bank. The banks are not going to put the data out there in the cloud. The banks want to keep the data in-house for security reasons. So all the deep learning, machine learning needs to run on-prem. So that the insights can be then taken out again to the middleware orchestration layer, which can enable the experience. For example, a voice-enabled message that will go saying that, hey, a company are looking at doing pretend sale, replying to say for your kids' college education. Right? So none of that conversation is going to happen in the bank. Or you only get these blanket targeted direct emails. So So here's a huge opportunity through deep learning where customized front-end interactions can be had with the customers, which can enable the bank to their
Hi everyone, I'm Heafitz, the Fintech strategy for this time. We developed a strategy a couple of years back that focusing on some of the key focus areas. So one of the focus areas is obviously artificial intelligence, natural language processing, unstructured data, things like that. We have played with voice a little bit. We tried some of the tools on our mobile app, right? Essentially, looking at the transaction, talking about like, okay, I want to raise a service request from a particular transaction. So that tags the transaction quite a lot. Right? We are working with Click, so you know that. And we are virtually pilot. Now, what has comes in for, I believe from Click and some of the other operations, where it's combining the AI part with chatbots. So it's not that we don't have a virtual agent, we have a virtual agent running for like 2 years. But in general, we started doing some analysis and figured out that it's not providing contextual information. So a lot of the information that the customer is looking for is providing either correct or guiding customer to a different way. So that's where the artificial intelligence and artificial learning part is very useful. And we'll see how well it works in the coming months. But really, we are providing the contextual information. So we were noticing a lot of calls coming to our call center from the self-service area, right? So it's not really working. So that's the major thing, right? How many calls are different. Now, in terms of US bank overall strategy, we are not looking to be markets or we're not looking to be field or JPMC field, right? Virtual banks. They have launched a virtual bank on Premier, a new platform, a Premier new platform together. We are trying to move our entire customer base to a virtual bank. So our customer base is about 20 million customers between consumer, small business, large commercial organizations, financial institutes, and we are looking to engage the mobile experience, engage the customers in mobile experience from 20% adoption today to 70% adoption in the next couple of years. So that's for 2024. Now, how do we do that? I think that's where the voice will play a large role. We are working with Alexa, we have some skill sets, we're talking about the balance and those kind of things. But I think the first big thing would be the self-service. And second thing would be self-service on the mobile channel. So essentially that's where the voice part will be important.
Do you think to some extent, though, you're going to have to keep a lot of the legacy platform technology that you had before? And I guess where I'm going is, this is a fairly significant part of your base of customers, particularly the more affluent 45, 50 plus year-old people who maybe don't want to do all this mobily, and maybe don't want to talk to their phone about their financial services. What are your thoughts there?
Yeah, so we have a large customer segment, 55 plus. We make most money with that customer segment, right? So we definitely need to keep that in mind in terms of the digital experience, and that they might not be as much mobile savvy as they are maybe on the website, right? Or .com experience. So we are looking at that part, but at the same time we are looking to engage millennials, multicultural group, right? So new segments where the individuals are already savvy from mobility and digital channel users perspective. So that's definitely part of the strategy. The other part of the strategy is to have a two-speed development, which is essentially we can keep our legacy technologies like like a bunch of other banks who use Hopen, which is like 100 years old, a very different system. But we are trying to extract some services from there, put it in a microservice framework, right? And then open those up, right, through our private cloud or virtual public cloud, right, through our mobile application platform, through the API gateway that we have developed recently. So essentially it will allow us to continue extracting services from the legacy platform. It will probably take, 5 to 10 years to completely retire our customer management system in Hopen. But as we are extracting the services, right, we are reducing the dependency in the legacy platform, and we are opening up the services through the mobile channel, right? Because I can have multiple mobile applications, right? As long as I'm combining these microservices to form the right innovation, right customer experience that we will deliver. So that's another part of the overall omnichannel strategy, and these microservices can open up multiple channels.
Last but not least.
Thank you. My name is Chris Hopen from a company called Switch. Just got this week from Amazon. No, we don't steal employees from Amazon. Switch was really founded about 4 years ago on the frustration and the lack of, call it, personal financial portability for all of us as consumers. And so switching back in the day, and if you look historically, switching has been a very hard thing, especially in financial services, because they're strong relationships. They're high in sort of trust value. And there's a lot to go into it. Look at your cell phone contract, look at your insurance contracts, these are not just to go sign up for cheapo air, right, create an account, right, they're very different. And so I spent a lot of time, all my gray hair comes from being on the internet in 1986 for the first time. And I spent a lot of time in network and network security and sort of at the protocol level. And so we try to bring a lot of that, whether it's PII, PCI, GDPR experience into the scaling of the platform we provide. But fundamentally, what we try to do today is we provide services back to issuers to try to drive to credit cards to the top of the wallet. And so if you think about the last time you got a new card, did you think about, maybe this is a good time to switch my card to another card, right? Hence the name Switch. And so what we do with Voice is we've got skills where you can actually talk to our back end. So instead of being sort of on the front end of Voice, we're a tile in the financial services category. They can work across thousands of sites. And so we use the term machine intelligence. It's because I don't really like the word artificial very well. And the learning part of it seems really slow, right? And one of the things we've had to do is we work across these applications that are existing. Starbucks, you name it, PayPal, you name it, Walmart, all those. We go update cards on those sites. The machines have learned how to log in as you, and I'm not sure how they do retinal scans yet, but they log in as you, they know where the payment method page is, they know how to go add cards and make that your preferred card and put your address on file. So you can simply make an instruction of, Alexa, make my Amazon Rewards Visa card my preferred card on Starbucks. And we're the tile behind that goes and automates and performs those automated operations.
Right. Now, I know for a lot of the big credit card issuers, these are also the biggest banks in the U.S., right? So yes. I guess I'm curious, because some of them, I know Chase in particular, has always felt like developing their technology internally is so important, but do you find that they're just not able to do these types of things, or it's just not on their radar?
Yeah, I mean, I think the compliance part, is a challenge, right? I mean, in some ways I look at it as it's kind of a defense shield too, right? In terms of protecting, making things hard, right? Making it hard to switch, protecting their existing businesses. And so some financial institutions look at us as a protection area or an insurance thing to protect their existing card base, right? And other people look at it to say, how are my cards being used? Where are they being used? Where aren't they being used? And how do I drive to the top of the wallet? Yeah. And so It just depends. In our API offering, it's a dedicated tenant model that sits on top of Amazon's PCI AWS infrastructure, and it's dedicated for that financial institution. They own all the data in it, they manage it, they control it, they operate it, and so there's APIs that extend. But we do things like we capture credentials just like in a card acquisition process. For site credential acquisition, we do the same types of things that like Stripe does or any other PCI compliant tenant does, so those credentials don't get commingled with the infrastructure of the financial institution. And so those things are separate. And so we have these conversations a lot where we can solve these technology problems, and it comes back to some of the financial institutions. It's like, you just need, it's not a moral decision anymore. It's a decision about, are you going to help your customers or you're not going to help your customers?
Yeah.
Right? We can solve these security problems that come with this. And so I think that's part of both the education, right? When you come back to the marketing piece, and how do you market this new technology, and especially like in the US bank case, like if your demographic looks like that, how do you present this in the right package that is consumable, that can provide the value that you want to provide?
It reminds me of PayPal is one of the companies that I cover, right? So a couple years ago, they decided rather than default everybody to paying with their bank account, which is their highest margin piece, they were going to freely allow them to choose to pay however they wanted. So if they choose their credit cards, well, initially folks like me were like in a panic, like, oh my God, your margins are going to be shot. You're going to pay with credit cards. What they found was people started using them more often.
Right.
So anything they gave up in margin, they more than made up for in volume and engagement, and then they added new products and services, and it was just a home run. But it made me think of banks are defensive, that they don't want to help. It was the same situation, and folks are like, wait a minute, why would you want to make it easier for your customers to pay in a way that costs you money? Yeah. And it was a tough sell, but it ended up working out for them.
Right.
Well, thank you.
I want to respond to 2 points you asked about earlier, and one, the first was, and some of my panelists also responded, was, will these things replace legacy? And also advice to startups. It's not about replacing legacy, it's about making the bridge between legacy and new technologies. In simple terms, it's the hybrid cloud security model. We might be able to we haven't been able to get off the mainframe in large insurance companies for over 5 decades, so maybe about 50 years. I can't even think that most of the people in the room can think about it, right?
You're not alone.
And that's this case.
Look at the processors.
Right. It's just going to be the way. And then if you took that forward and said, well, then we got into server-based computing. I don't know how long it will be before we're off, physical servers, although the cloud will overtake. It's not that we're not going to, but it's going to take some time. So part of the balance is not trying to replace that legacy. It's trying to bridge to it and understand how complex that security model is. How do you make sure you've got identity management, the right authorization, authentication? How do you make sure you have data loss prevention? How do you do that? And especially when you talk about voice, it's a whole new arena. Yeah. So the second part I was going to tell you is, you're saying, well, are there anything that's, you asked earlier, what's moving the needle? Where are we seeing the biggest trends? So I would like to say that if you go into the Michigan metaphor, if you're looking at a map of Michigan, and we're all the financial services companies over here, and the consumers are here, and everyone's going to access the consumers this way. There's a long road, and they get it, and some people are in faster cars, some people are on bigger highways. They're figuring different ways.
Drive crazy.
To bridge over that, say it's a 100-mile gap, and every 2 years you build another 10 miles, another 10 miles. You don't want to be the one who 10 years from now didn't invest in each of those gaps. So we're seeing incremental changes. So you're not going to see AI shatter the way banking is done. Right. It's not going to bring in billions of dollars overnight. But incrementally, over 2 years at a time, in these increments, 2 year increments, if you don't start until you're 6 years in, you've missed some of those building blocks that some of these fintech companies are providing. And if you don't start till 8 years in, you might be lost. So a company like Prudential, that's been around for 130 years, we know that we have to reinvent ourselves. We don't have to reinvent ourselves in entirety from the ground up. We have to be prepared to build for what's coming next, and that it's a long tail. We're not, you're not going to erase $1.3 trillion in assets in 2 years.
Right.
10 years, who knows?
That's a very good point. I mean, when we started our journey a couple of years back, we first wanted to understand where we will be playing, right? And the fintech engagement can be just simple data exchange, like getting leads from lending tree, right, to equity investment, right? So there is a wide spectrum And you have to start somewhere. Maybe you start more of a loosely coupled collaboration, right? But right now, we are investing a lot in the APIs and digital sandboxes so that we can do a whole lot of proof of concepts, pilots, right, with the various fintechs in various capability areas. So example is like 2016, we did 3 proof of concept. 2017, we did 15. Right? We engaged a bunch of different organizations for the capability areas that we're focusing on. 2018, right now we are running 6 pilots and numerous proof of concepts. And now we're looking at 2019, where I'm looking at my entire investment portfolio and figuring out where I can bring a particular fintech or particular fintech focus area to do more proof of concept pilot. Now, this is a journey. And the security team has to be along with you all the way, right, starting from the very day one. And the other team is very important for us is the strategic vendor management team. They do the vendor risk assessment part. We have hit a couple of winners where we knew that this is a really good organization. The founders are solid. They are building the critical mass. And then they got acquired, right? We have come across those type of situations, like where we are about to do the final agreement. They got acquired by Facebook or they got acquired by PayPal, right? So we're learning from it, and we're making sure that our TPRM process is kind of taking care of that. The contracts are making sure that we are not going to be left in cold right after these guys get acquired. So it's a journey, and the 2 critical teams are information security and your vendor management team. And then your technical team that can support from digital sandbox and cleansing the data that can be used for proof of concept and so on and so forth.
Yeah, I just wanted to add one point to what he just said, which was so interesting and something that we learned along the way, which was that startups or let's say early stage companies need to find a way to find a niche and a bridge, right? And one of the ways that we've done that, which is very interesting, which our product team resisted for the longest time, but there's no option but to do it to make sure that we can provide the niche and the bridge. Is that instead of providing something on-prem, which was the first choice, we've actually been able to port our entire solutions to private cloud. Mm-hmm. So what that means is that basically any enterprise who's using any one of the cloud providers and has their own cloud account can basically take our solution and deploy it over there, right? And that's something that wasn't trivial. It took a while to get used to all the different cloud providers and being able to support that. But that's an example of kind of what I totally agree, right? Which was, first, V1 of our journey, oh no, this is how it's done, this is how we're going to do it, only available as a public shared cloud. But that's not going to work when it comes to banks and financial institutions, right? So we had to adapt, and what we can do as, let's say, more, I would like to think, what Count said, startups and nimble companies is adapt and try and bridge the gap between, the legacy and what's to be 10 years down the line.
Right, right. So here's a question for the folks from the big banks here. So I've heard that it can be very difficult to establish a working relationship with a fintech from a regulatory and compliance standpoint. Did you guys have any thoughts on that? I don't know if you've gone through those things and can comment.
Yeah, I mean, for Wells Fargo, we actually have a really vibrant, a couple of really vibrant groups that are working with fintechs. We have an innovation lab, so they're the ones who kind of go out and they'll talk to all the fintechs and the various startups and authentication vendors and things like that. And then they, play around. They have a sandbox where they do all kinds of stuff. And then once we hit the point where it's a solution that, like, my group would be interested in actually implementing, it's already passed the test with the innovation lab and things like that, then yeah, we do have to go through, some security reviews and various things, but because we process it through the innovation lab, it makes the process a lot easier. I think they're kind of able to weed out fintechs who maybe wouldn't work or wouldn't pass our guidelines and things like that.
Right,
so.
right. It's interesting. It seems like only 3 or 4 years ago, the fintechs, which is typically when people said fintech, they meant the lending clubs of the world. They meant the lending-oriented companies. They were going to put the big banks out of business. That euphoria didn't last for very long. And I think what people started to realize is, the big banks have two things. They have the cheap money and they have all the customers. So now it's a matter of, for big banks, do we try to acquire or do we partner? So I don't know, maybe you guys can talk a little bit about that decision. How do you go about making that decision? Do you acquire a company or do you partner with them?
I can speak a little bit about that. So far, we have not acquired a fintech of its own, right? Just US bank going out and just investing in the entire company. However, Zelle is a very good example where it's a consortium banks, right? They have come together and created Zelle from early warning system, right? So they spun a separate entity. There is a management group keeping a part of the equity, and then the banks are sharing the rest of the equity. So that's a good example of good partnership, or I would say kind of investment in general. The other example can be like in terms of back office automation and stuff, right? Where again, like we have created companies with other banks where we have managed the document management systems or back office processing in general, right? Those entities do that, right? So those are kind of good example. Now, in terms of moving, 2 years from now, are we going to acquire a particular organization or particular startup? I think it will depend on the business model that they are going to bring in, because part of the fintech engagement is to be better, cheaper, faster, right? That can be done through a licensing model, white labeling and whatnot. The other part is bringing a complete new business model that can generate a new stream of revenue for big banks, right? Or financial services institute in general. So we will be looking at that kind of an opportunity where we can actually create a complete new product or create a complete new business model, right, that can enhance what we have. So that's the way most likely it will work out.
I have a comment. So we have a program going on right now internally where everyone that works at Bank of the West can come up with an idea and provide it. You form into teams, and it's about becoming an intrapreneur. And I think it's changing the mindset of folks that work at the bank to be more open to innovation. And whoever wins this competition gets to do a proof of concept for that. Whatever it is, if it's a tool, if it's an internal process, if it's something that's sold outside the bank. So, we also have an innovation lab. It's owned by BNP Paribas, but and we have others. I just had a POC run by me recently. So, we've got some of that going on at Bank of the West as well.
Yeah, Wells Fargo does that kind of stuff too. We have an innovation challenge actually right now. I think they just announced the top 50 ideas that we run that like every year. So we have the internal stuff, and then we also have a startup incubator as a bank. So we go out and look for companies, young companies that we might want to.
The big banks can be a little bit slow to a trend, but when they catch on in a big way because they've got the resources, obviously, to capitalize, and that's the important thing.
We recently had, I have a friend that works at Ripple, so asked her to come in and talk to us about blockchain. They ended up sending someone who does that as a job. And
we got through 54 minutes without the word blockchain coming up. I never would have expected that. There's one more word that hasn't come up. Crypto.
Anyway, he came in and it was fantastic. There was no, I think he was trying to sell us something, but really he was teaching us about what's going on out there. We're in San Francisco, it's fintech, right? So I think building relationships with fintechs without having to necessarily say, okay, we're going to partner with you. It's a good thing. You don't, sharing information.
Yeah, I mean, I think from the startups get to see all the way these different larger financial institutions look and how they run their different programs, whether accelerators or incubators or PLCs or, you know, and what's kind of interesting is just how things have changed. And I think there are some of these situations where we walk in, and I had one in a big bank through the Ohio Valley. And I had 2 meetings with them, and then they went dark for like 2 months. And I was like, oh, God, that's the worst, right? Like, the guy comes rifling back because he said, we just realized after the first 2 meetings, we weren't even organized to really understand how our cards were being used and how to drive to the top of the wallet. And he's like, now I've been knighted, and I'm building a team, and you guys are part of that team, and we're going to, you know, build this thing together.
You sent him into a panic, and he went dark.
Yeah, and so it's like until you have some of these conversations, people don't even know what's there and what the power is. I mean, that's
a good point. I mean, internally we are standing up small teams, right? They are trying proof of concept, or just trying in the lab, right? Various areas like blockchain, or some of the other things. We are participating in the consortiums, right? The consortiums that are looking to develop the standards and stuff. FDC3 is another example. So it is a learning experience for the large organizations, I would say like US Bank. And we are actually looking to hire more talent from outside. We know that the internal team, however intelligent we are, we probably are lacking some experience, right? So we are bringing in some external talent in some of the focus areas.
Now, we're represented here today by and large, really big banks. But I mean, think about it, there's still 8,000 depository institutions in the US. Now, that's half of what it was 15 years ago, but you have to wonder, like, if you guys are struggling with it, you can only imagine what a $100 million community bank is doing. I mean, I know there are companies, the Fiservs and FISs of the world that, intend to serve that kind of customer, but it's got to be so intimidating for them.
On the other hand, fintech becomes the democratic approach that even the smallest institutions can leverage the biggest solutions. So what used to only be available to a multi-billion-dollar asset under management company, like some of us, can now be done by the local institution. I mean, voice, AI, these things are they're not going to be judgmental in who chooses.
So they subscribe to a cloud-based service.
Right, there you go.
It's fascinating, actually. There's this really interesting kind of inversion that happens for smaller institutional community banks. So in a big way, they're much more adventurous when it comes to trying new things, wanting to try voice, and they like to experiment. However, many times they don't have the infrastructures internally to support the support of bringing new technology into the bank and integration into their product ecosystem. Sometimes that requires technical teams in many cases. It requires infrastructure around the productization of new ideas. And then on top of that, your Fiservs, FISs, NCRs, these institutions, they're almost they like to be laggards, right? So they're like, well, look, let's see when all of the banks have this thing, then I think we're going to make it a product because we already know that this thing is going to sell, all the banks have it.
Right.
So what we're observing in the market is, it turns out the biggest banks in the world have been very innovative as of late, at least when it comes to things like blockchain and artificial intelligence, in experimentation to kind of be the first examples of how that can kind of revolutionize the experience and the operation of the bank. And then, you'll have your FISs and your Fiservs kind of follow suit because then they see the business case proven out by the big institutions.
Right.
So, it's fascinating. I've seen a lot of success with the FIS, Fiserv replacements, right? Like they want to do the entire stack from core up. Right, digital transformation of community banks. They have actually gotten a lot of traction, whereas the fintechs that are additive to an existing ecosystem have always run into trouble. And even when the community banks beg FIS, beg Fiserv, please figure out a way we can make this work. You know, the FIS and the FI don't respond fast. It's interesting.
It's just not worth the work for them.
Yeah, exactly.
Yeah, it's not worth the effort.
Exactly.
Yeah.
Talking about conversational banking and innovation, right? So what's the greatest thing that's happening right now is that banks are coming out to have this conversation, which is not happening like 5-7 years back, thanks to technology and thanks to the questions that's been asked in the bank. For example, you know, professionals like Christine coming from a marketing UX background, joining the bank, they change the conversation within the bank, right? Or to take the example of a Capital One, they supported an organization called Chaotic Move, which they later acquired. And that kind of led their UX first, customer first thinking at Capital One Bank. We, as an organization, we bring in ideas from Africa to drive voice-assisted banking. We bring in ideas from India where the unbanked to bank, because of the smartphone penetration, we have a digital KYC where he could be banking in 30 seconds. Right? We bring in a case study from Japan where we are creating a POC for virtual banking for aging population. Right? Now, thanks to forums and conferences like this, and banks also coming out and holding this conversation, ideas being exchanged. That is really putting that innovation on fast track that we are all seeing right now. And I really thank the professionals of the bank coming out and holding that conversation with the fintech players. Really appreciate it.
Great. Well, I think that's all the time we have. So I want to thank our panelists and thank all of you for listening.
Thank you.
Thank you.
Thank you.